Good morning, Predicted Trades family. Hope everybody is doing well. What a big drop we had yesterday. I'm not going to spend a ton of time covering it, but I will cover a few key points. We dropped in the pre-market from that first Keltner up, down to the moving averages, opening right in them. We popped up to that daily 21, daily 50, and rejected. One thing I want to cover today is how to identify a trade, or at least what I wanted to cover in this review is how to identify a trade when we break through something and then give it up. So we got through that daily 50, almost got to that daily 21, but then we gave up the daily 50. That sets up the first trade, the first short, down to key levels, 40.20 that we just went through, and then 39.96, that 4,000 psych level. We bounced perfectly at that 39.96, and we started a journey back up to that 420. When that was happening, let's look at the 5 minute. Zoom in right on that midday. When we fought from that 39.96 to that 40.20, I was talking about that we got above the 5 minute MA, right? The 5 minute 21. So we fought up to that 5 minute 21. We set a higher low. We got through that 5 minute 21. Now when we break back below that 5 minute 21, it sets up the next short. Because if we're actually going to start an uptrend, and once we get above the 5 minute 21, we have to bounce at it. You can see we pulled back to it, we started the bounce, and then we gave up the bounce. That sets up the second short. And if you can see as I'm hovering right over there, that second short, it's on that red candle that engulfed the previous 30 minutes. So just wanted to point out a few key signs that helped to set up those shorts and a few rules when it comes to moving averages, right? When we get above something and then lose it, that sets up the short. And again, when we get above something key and then lose it, it sets up the second short. Really, there were only 2 trades yesterday that needed to be made. So, coming into today, what can we expect? You can see that pre-market, we closed kind of near this 39.53. We started to get going a little bit to the upside, getting back to 39.75, 39.80, and now we're right back near yesterday's lows in that 39.41. We do have more economic data coming out today. Yesterday it was Consumer Price Index, CPI. We always want to pay attention to CPI. This is going to be giving the market information about how inflation is going. Yesterday, the forecast was only a 0.3% increase. It was double that. So we got the reaction that we got. Basically meaning the price of things went up in August when we expected it to go down. Or when we expected to not go up quite so much. Today we have Producer Price Index for August. The expected forecast is minus 0.1%. So we'll have to see what we get there. If it's under that, who knows, we might get a positive reaction. But we'll have to see when that data drops what we get. Now, where can we go today? After such an enormous drop from first Keltner up through the mean to that second Keltner, or that first Keltner down, sorry, that was a 2 ATR move, in a way. I mean, at the worst, at the lows. ES was down 150 points. We got about a 75-point ATR, which actually stepped up after yesterday's move. So we'll have to see how that reaction to PPI goes. Have to see if it accelerates us to the downside, if it slows the bleed a little bit. I've seen crazy things where we have some huge drop and then we get another economic bit that sends us back up. So we'll have to see how they start to react to that data. But for today, let's try to zoom in here a little better. Not loving any zoom, but after you have a big drop like that, this is what you get to deal with. So let's see if we can hold yesterday's lows, hold this zone that we're at. If we can, looking to get back up to pre-market high, back up to 39.96 in that daily 8. Through that, the daily 15 sits near that 40.20. The daily 21 up near 40.44. To the downside, should we give out this 30-minute squeeze bottom, this 39.41? We've got our first stop at 39.22, 3900, and then down below, we have 38.80, let's call it. We have the second Keltner down at 38.70. And then 38.55, next key level below that. Also 43 there, making a nice little zone and target if we get through that second Keltner down. On NQ. Look at that, fell straight to key levels. Excuse me. We are holding up below last week's lows. Just going to see where this falls. Look at that. So we had a sharper trend line to follow us up. I even drew some yesterday that were even sharper, just in case, you know, we didn't have a crazy reaction to CPI. All those very sharp trend lines gave out. You can see that we fell to the slightly less extreme trend lines. Then we rejected, came down, and now we're at kind of our flattest trend lines from the absolute low of last week and the one right above that. So let's see today on NQ if we can hold this 30-minute squeeze bottom. This 12,100 key level. If we can get going, looking to get through 12,300, back to this, 12,000, the pre-market high, get back to this 12,250, and the daily 8 at 12,500 above the daily 15. But if we start to lose this 30-minute squeeze, that 12,100, first stop 12,000. Last week's lows, around 11,900, let's call it, 930. And then 11,900, where that second Keltner sits. The ruddy. Ruddy actually holding up a little better. Still way above last week's lows. Jeez, there we go. So, Ruddy, down at that first Keltner, So let's see if we can hold the trend line I just drew. Sorry, we have a ton of trend lines here. Technically, we are back at the trend lines from the downtrend that we broke through. If you remember already, the downtrend that started a couple of weeks ago, I drew two trend lines that kind of created a channel. We broke through those last week, and now we're back at them. At the same time, we have a trend line coming from last week, intersecting. We'll see how the data drop goes, but if we can hold here at this first Keltner, these trend lines, looking to get back to the daily 8, above at 1850, pre-market high is pretty much there as well. And then past that, the daily 21 at 1874. If we give out that first Keltner, first stop, that 1805-ish, psych level 1800, and then that second Keltner down, 1781, which gets us near last week's lows. YM. YM, I think, probably got hit. Well, NQ kind of got hit the hardest yesterday. But YM was, I think, what was it, 1,300 points at one point? Just about. So, on YM, let's see if 30-minute squeeze, yesterday's lows hold us up. We do have this psych level 31,000 that we could dip to. Obviously, everything I'm saying, this data drop could just dump us down to the next thing pre-market. So we have to be ready for that. Let's see, but basically if we can hold or get a positive reaction and start to try to make a bit of a recovery pop, first stop would be that 31,462 and then that 616. You can see yesterday we dumped from those moving averages straight to that 616, tried to hold it, then down further. So these two would be my first stops to the upside if we can actually get going on some kind of a recovery pop. If we take out yesterday's lows, going to that 31,000, then that second Keltner down at 38,877. And who knows, they might get spicy and send us to that 30,500 and 275 where the third Keltner's at. Why not go from first Keltner to third Keltner down in 2 days? Apple. Apple was one of the weakest names yesterday. It dragged the market down. So many names tried to get going to the upside. Tesla held up well. Google, Amazon, Microsoft all tried to get decent bounces midday. Apple just completely sucked. It was still setting new lows as things were trying to bounce, and it just kept dropping. Last week we held this zone, ran from it up to 165, and in one day we're right back to that zone. A lot of volume exchanged hands last week at this zone. So, somewhat expecting some defense of it. We do have our last week's lows around 152.5, let's call it. You can see we gapped up and tried to hold above this zone, and now we're back near yesterday's lows. In fact, looks like pre-market we wicked a new low, but coming back up to test. On Apple, if we can at least get in this zone and hold it and start to push out of it and above 155, above that pre-market high, looking to first get to that 157-ish, about where we sold off from for the afternoon. And overall, to try to recover, looking to get back to that 159.5 if we're going to keep going. If we slip under this zone and keep rejecting it, first stop, that second Keltner to the downside at 151.5. Probably going to be stepping down a little closer to 150. And then below that our zone at 147.5 and 149, let's call it, where that third Keltner sits just below. AMD. Like everything else, went down yesterday, got below last week's lows. I'm not going to touch chips for some time, and you'll see when we get to NVIDIA. NVIDIA set a new low of year, and if we think about that, all of the tech stocks that we're tracking, have been in a good uptrend since June. NVIDIA fell so hard after their earnings and then with the market yesterday that it set a new low of year below those June lows. So it's the first in the tech list to get and set new lows of year. I'm going to leave it alone for a little bit. That means that there's a lot of relative weakness over in NVIDIA. Can you keep shorting it? Yes. But we'll see when we get there. It's probably down near third Keltner or something. But overall, AMD went from the mean through first Keltner to second Keltner, still going, still going. I'm just giving them a break. Can you short them still? Yes, but your risk to reward is getting more and more limited. So, just going to move on. Amazon. Like I was saying, Amazon had some decent relative strength yesterday. It slipped from the 21 to the 50, tried to get going back to the 21, and almost made it. Obviously, it went back down with the rest of the market to that first Keltner. We are still above yesterday's low, unlike Apple that we just saw wicked a new low. So on Amazon, let's see if we can hold yesterday's lows. Looks like a 30-minute squeeze is starting to form. See if we can hold that squeeze bottom, if we can get going to the upside. Looking to get back to 128 pre-market highs. That daily 50 sits above as well. 128.5-ish. Then 130, where we rejected midday yesterday. Any past that, we have a couple of moving averages to keep an eye on there. But 130 is going to be pretty key. It was resistance last week. We got above it. Now we're back below it. If we keep slipping and take out yesterday's lows, going to 125, our last bounce point last week. And then past that, we're going to the previous week's lows, around 123.5, 124. And past that, that second Keltner down is around 122. BA got beat up through the last 2 weeks' lows yesterday and down to this 2-day squeeze. I remember covering in prep for the last couple of days that we do have that 2-day squeeze down there that is a little concerning. Should CPI not go well, since BA only fought back to the moving averages and then just kind of stalled out. Whereas we saw a lot of names get through the moving averages and up to their first Keltners, right? BA couldn't even fight to this key zone above, gave out, and down we went. We are below last week's and the previous week's lows, which set up around 150 and some change, 150.5. If we can hold and start to see some upside in the market, looking for BA to come off this 2-day squeeze bottom, although it is already setting new lows, right? So it's got some relative weakness, but it's got some decent weight. So for upside, we need BA to hold that 146, start to work its way back to 148, 149, 150. And last week's low is 150.5. But if it keeps showing relative weakness, takes out 146, 144, and then 142, where that third Keltner to the downside sits. But I love the fact that we do have this 2-day squeeze. It's not You know, it's not high compression, it's low compression, but it's been established and getting thicker, meaning it's not going to just disappear. Even if we dump through it, it will still be there. So for a day or two, right? So let's see if this 2-day squeeze can now provide support. You know, let's take a quick look. Come on. There we go. You know, we set our June lows. We've had a good run up. We could, just because we've started a sell-off and had yesterday, I saw a headline that yesterday's drop was the biggest since June 2020. So it was definitely a huge drop yesterday. Definitely a unicorn, right? It was something outside of normal. There's going to be a lot of folks that are on the street that are already short. They sat through the rally back to the means, still in their short position and sitting through pain. And now all that pain has paid off. There's a lot of short interest right now, a lot of bearish sentiment on the street. It would be very interesting if we did not head back down to lows, if we just came back to something that gives us support. If you look after we made those lows and rallied up, we got to a point here and we started to pull back and trap bears, trap those shorts before coming back up. And we rejected again around that same area. If we look at where that area is, that 146, on both of those highs that we ultimately got through, that's where we're pulling down to. And we have a 2-day squeeze there. Last time when we were dropping down to lows, to new low of year, we didn't have any daily squeezes to support us, any daily or 2-day. Now, this time, we do. And at a point that used to be resistance before the rally up in July and August. So I'm using BA as an example, but if you look at other names across the board, we'll check SPY when we get there. You'll see kind of the same thing. Moving on, CAT. Got to our key level, rejected down. Fought up to our other key level, rejected down. But holding up very well against the last couple of weeks' lows. And right near that first Keltner. So relative strength in CAT compared to something like BA. Let's see if we can hold that second Keltner if we do have a little dip. Around that 182.5. If we can hold there, back to the moving averages above 185 to 188, where that daily 21 sits. If we start to get through yesterday's lows, first stop this second Keltner, and then we'll start to get down to some of last week's lows, right? This 180 going to be very key if CAT keeps slipping. Google. Relative weakness in XLC, right? So probably won't be playing them to the upside. Not going to worry about catch-up trades right now. I want to follow leaders. So Google, at least midday, tried to get a decent bounce going, but ultimately rejected right around last week's low. Already setting new lows, and down at second Keltner. If it keeps going, and the market keeps slipping, first stop is that 101.5. Well, sorry. First stop will probably be like 103, but that ultimate target will be that third Keltner at 101.5 and that psych level of 100. If the market can hold and start to see some upside, Google needs to take out 105, 105.5 overnight highs, yesterday's rejection point, and last week's lows around that 106.5 in a fight to get back to Keltners and moving averages above. GS. GS. Gap down to moving averages and then fell to that first Keltner and daily 50. Hopefully, as we cover these things, you guys see why I teach and track each of these daily levels. They can lead to a good roadmap. I mean, on this GS chart, I have no key levels. I haven't charted it in a while. And those moving averages providing good guidance, right? We opened near those moving averages, we fought above the 21, and then we lost it, setting up the short down to the 50. At the daily 50 and that first Keltner down, let's see if we can hold there, hold yesterday's lows, and get going to the upside. First up would be getting back to that 330, then 332, and then 334, 335, where the moving averages sit above JPM. JPM pulled down from the highs, pre-market, and didn't drop too hard. Interesting. Some decent relative strength in JPM. Give me a drawing. Got a few minutes till the PPI data drops. Interesting. Strength in JP Morgan. So let's see if it'll hold trend line. Yesterday's lows, these moving averages, the daily 50 at around 115.5. If we can hold there, start to work our way back up. We have the daily 21 and daily 8 to deal with, kind of flanking 117. Then 118, where we rejected yesterday. Same with 119, and a fight to get back to 120. If we keep slipping and lose the daily 50, first stop 114.5. Then that first Keltner around just call it 114. So 114.5, 114, kind of the first zone to arrive to. Any more past that, we're looking at these lows from the last couple of weeks. Meta. I wonder if this thing set a new low of year. Yep. Meta set a new low of year yesterday. So, not playing Meta to the upside. I haven't ever played Meta to the upside this year since this ugly ass drop, right? I have not touched one Meta call. Go back. So on Meta, we have a 2-day squeeze as well. Very big and thick. Sitting near that second Keltner. Even getting down near the bottom of that 2-day squeeze. We have the third Keltner just below. But with it being mid-compression like this, it'll be interesting. Could provide support right at that 150. And at least just slow the bleed on Meta. Overall, not loving this name, not going to play it unless it's shorting. And I know a couple of folks did pick up some shorts on Meta up here going into CPI. Because why not? If market's going to tank, Meta's going to tank hard. So great trade there from 170 down to 150, 20 points in a day. Sheesh. Good trade there, Star. I know you hit that one. Let's see if it keeps going and giving up pre-market low down to 150 where that second Keltner sits. Below that 148, 146, yada yada, till we get to that third Keltner. Let's just move on. Microsoft. Setting new lows from the last couple of weeks, so a little relative weakness there. And wicked a new low from yesterday. So basically, you know, it's not trying to lead on bounces really. I mean, kind of a decent bounce yesterday, but just a VWAP and then rejected. And it only fought back up to the moving averages, not as far up as like first Keltner, like some names did. So see if we can hold pre-market low, get through pre-market high, at 255, next stop 257. If we keep slipping through pre-market low, yesterday's low, 250, first stop, 248, then 246, where that third Keltner sits. Netflix. Holding up against last week's low. Dropped from first Keltner through the mean to the daily 50 and that first Keltner down. If we can hold first Keltner down, start to get back above the daily 50, looking in that 220 psych level, looking to get to 222, kind of the lows before setting new lows yesterday. Then 224, that last rejection point, on our way back to moving averages above. If we give out that first Keltner down, we've got last week's low around 215. And then we've got a one-day squeeze starting to form around 212. NVIDIA. Like I said, I'm not going to touch it. Down near third Keltner. New low of year. It made another good short move. We shouldn't expect a ton more past third Keltner, so just kind of going to leave this one alone. QQQ. From first Keltner straight down to first Keltner down and almost to second Keltner down yesterday. Holding up above last week's lows. And if we connect last week's lows and that pre-market that overnight that set a higher low, we're at that trend line right now. Let's see if that trend line can hold. If we can hold and try to get back through 295, next up 296 pre-market high, 298 where we rejected yesterday, psych level of 300. If we keep going, take out yesterday's low, pre-market low, then we're going to test 290, last week's low, 291, 290, and past that, we've got 285 psych level, third Keltner down around 283.5, and key level at 280. Guess we're not seeing a 2-day squeeze on QQQ. SPX. I'm going to go ahead and mark a huge old gap to fill. Should we ever go to the upside again? Open around the daily 50, rejected, went through and filled this old gap. Normally I'll just go ahead and delete the gaps when we fill them, but if we can get going to the upside this week at all, that gap could provide resistance. So going to leave it for now. But fell straight to key zone on SPX that we took off from last week. We've got last week's lows around 38.86, below that 3900 psych level. Going to just go ahead and connect some of these. No, we're already below them. Yeah, so on SPX, let's see. Right now, sort of flat-ish. Ooh, PPI data came out, right? Let's see, did we get any reaction? Okay, we got a little bounce. Yeah, we'll see if that develops anymore before we're done with prep, but a slight gap up. Let's see if we can hold this zone on SPX today if we do have a dip. 39.36, 39.28. are just key levels I've had for a while. They used to be resistance. They turned into support. Now we're back at them. Let's see if we can find support there. If we can get going to the upside, 39.50, 39.70, where that first Keltner sits, and a fight to get back to the zone and psych level of 4,000. SPY. Yeah, we don't have that 2-day squeeze in place, but just to take a quick look. No, that's not the time frame I wanted. No, yeah, it is, sorry. So on SPY, I have a zone marked here that is an old gap zone. We've obviously filled it, but that gap zone was resistance multiple times. Then it became support. It even was support again in the sell-off that we've had since we tapped the daily 200. We have dumped back almost to it, not quite. So again, like I was talking about on BA, the whole street is thinking new low of year is inbound. Everyone's shorting to the ground, right? It would be painful should we hold here again and take off to the upside for all those shorts. So, will be interesting to see what we get. And worth noting, our trend line from low of years that provided the bounce last week. We hit that trend line right at this zone. We're at that trend line now. We held it yesterday, trying to hold it pre-market, back above it. So, 395.8 going to be the key thing to take out. Yesterday, I somewhat expected us to stop there, and when we kept going, I was still kind of like, wow. But overall, holding up above last week's lows. Just connecting last week's low and the low from yesterday. Since we just set a higher low, pre-market, from yesterday's low, and it kind of holds that. So let's see if we can hold these key major trend lines, pre-market low, yesterday's low, and try to work our way back up through 395.5. Beyond that, 398 and then 400 psych level, where we sold off from midday yesterday, and then above that moving averages, right? If we take out yesterday's low, pre-market low, last week's low, going to be very interesting in this zone that spans from 390, 389.5 down to 387, we'll call it. So this zone very key, looking for this to hold this week. If it doesn't, it will spell some interesting downside for the rest of the month. And we do have earnings kicking off here at the end of the month on MU and some of the names that report first. So we have an earnings season coming up. We ran from almost third Keltner down, back to first Keltner. They took profit, they sold on some not favorable data. They could just be, potentially setting up for a pre-earnings run. Tesla, one of the strongest names yesterday. As silly as that may sound, it tried to get going, it did not open and tank. Relative strength in Tesla holding its daily moving averages. So if we're going to see upside in the market, I highly suggest we pay attention to Tesla. And if the market's going to keep going, There may potentially be a catch-up trade here, but lately catch-up trades just have not been working quite so well. So let's see, did set a new low pre-market. Let's see if we can hold that 290 psych level and yesterday's low, pre-market low, all making a zone of support. If we can get going, looking to get back through 295, where a lot of those wicks stopped, that daily 200, and a bit to get back to 300, where that first Keltner sits. If we start to lose the daily 8 and those lows, back to the daily 21 at about 288. Should that give out psych level 285? Let's see. Then 280 and the daily 50 at about 278. UVXY I'm going to take a look at because it shot back up. Obviously with the market, it's back up at the highs that it rejected. So, I want to pay attention around here. In fact, I'm going to make a little zone. Where is the highest high in all here? I think it's this one. Yeah, I'm going to go with that. Come on. All right. So we've got a zone of resistance here. We have our daily 50 and that first Keltner up in that zone. Basically, I'm looking for upside in the market. I'm looking for UVXY to reject this zone and start to roll over back to where it kept trying to bounce at around $10, and then below that back to these daily moving averages in a bid to get back down where we were, right? So going to watch this zone. I know I drew it a little wide, but I'm trying to get from the highest highs kind of just to where a lot of candles closed or rejected. So let's see what we get there. I like that we're below it and we just tapped it and rejected again. So let's see if we can make an M. If the market's going to see more downside, we're going to get up and probably, we're going to get up to this daily, first daily Keltner up, this daily 50, and then through this zone to tag this daily squeeze top on UVXY. I do like that though. Just like BA had a 2-day squeeze just a hair below, UVXY has a 1-day squeeze top just above, lending to that scenario that we could set still a higher low on year rather than roll back over. So let's see what we get. Going to keep an eye on that today on UVXY. VIX. Now I'm going to draw a zone here because I basically have the levels marked. It's 27, 27 and a half. Looking just like on UVXY to stay under that. We do have a 2-day squeeze just above as well on VIX. And that the bottom of that 2-day squeeze is right at that 27 and a half. So if we're going to see a little more downside on the market, VIX will get through that 27 and a half, 28, maybe even as high as that second Keltner and 28.8. The top of that 2-day squeeze. But if we're going to see some upside in the market, really want VIX to stay below 27 and a half, start to fall down, take out 27, take out 26 and a half, kind of those pre-market lows, and a bit to get back to 26 and 25. Ultimately, all these moving averages in the daily 200. So hopefully this is helpful for everybody. Thanks for tuning in. Good luck today, and we'll see everybody in the chat.